But in this instance, it does, in my opinion, fulfill sort of one of the criteria or towards one of the other factors I've been speaking about, and that is the market capitulation. It's where the vendors out there looking to sell a property no longer think that they can get what they could have got for selling back in October, November, December last year. They're going to meet the market. Well, hello again, everybody. This week I just thought I'd take a quick look through some of the indicators out there showing us where we're at for the residential real estate market on average around New Zealand at the moment. If you've been watching these videos regularly over the past few months, you'll be aware that a key theme I've been getting across is that definitely the market is weak and going to get weaker, but we should expect to see eventually some early signs of the degree of that weakness easing off. And I think I've highlighted one or two of those over the past few weeks, and I just want to highlight some more of those today. And I'm going to start with something there which many of us have spoken about for the past few months, and that's the government's special residency visa being given to people on working visas who have basically spent the pandemic in New Zealand. Initially, there was an estimate that 165,000 people, so the worker plus their families, would become eligible for permanent residency, and therefore the family would be legally able to buy a house. It's now looking like about 200,000 people are going to be collectively captured by that. And there were some reports in the newspaper about 3 weeks ago from real estate agents noting that they are seeing an increasing number of these new residency migrant people showing up at the auctions at the open homes now that they can legally make a purchase. So it's good to see something I guess I expected to see happen is happening out there. Not in great numbers, I would suggest, but it is one of those interesting factors in the market. Another interesting factor comes from the ASB's quarterly survey of housing expectations, etc. They ask people, do you think it's a good or bad time to buy a house? And what are your expectations for prices? Do you think they'll go up, go down in the coming year? And there was a bit of media focus on the net 31% of people who said, I expect prices are going to go down. And that was the weakest result since the start of 2009. Now, if you look at that, you'll be thinking, oh my goodness, this means house prices are going to fall away tremendously more. Why would I touch the housing market with a barge pole? Well, the thing to note about this survey is that it tends to lag what has already happened with house prices. It doesn't actually tell us where they're going to go. But in this instance, it does, in my opinion, fulfill sort of one of the criteria or towards one of the other factors I've been speaking about, and that is the market capitulation. It's where the vendors out there looking to sell a property no longer think that they can get what they could have got for selling back in October, November, December last year. They're going to meet the market. And my interpretation of the net 31% of people saying they expect prices to go down is that the vendors are now in capitulation mode. We're increasingly in a good market, as it were, for the buyers to take advantage of the doubling of the stock numbers from a year ago and make themselves a purchase. And then also, let me just make quick reference to my latest survey of real estate agents. The results won't be out for a few days yet, but I can certainly tell you that the indicators, none of them are saying the market is going upward, but a great number are saying the degree of weakness is weakening. So it's like there's a curve going down, but it's starting to flatten out. We are getting closer to the bottom of the housing cycle, and my belief is maybe that's around about the turning of the year. It could be a bit earlier if spring turns out to be good weather-wise and a good number of buyers come out of the woodwork, and maybe once we've got a few more people realizing that just because the Reserve Bank's going to put its cash rate up a bit further does not mean the fixed mortgage rates go higher. In fact, there are more people coming around to my view that the rates actually peaked back in June. They're down 0.2 to 0.4%. They're not going to fall away rapidly by any means, but those fears of signing up for a mortgage and then all of a sudden your interest rate is going to be a lot higher in a year's time, they are disappearing, I'd suggest, on a daily basis at the moment. So things moving in the direction of the housing market bottoming out a few months down the track. But let me just repeat, the market is still weakening at the moment. The prices for the next few months are in all probability going to go a bit lower, and let's say 5%, because 5% seems to be a number that people like a lot. Just remember, none of us have a model which actually accurately forecasts where house prices are going to go, but with the 5 monthly surveys I've got up and running, I think, get some early insight into when the turning points are coming along. All the best out there.